My name is Esther Salami, and you're welcome to the maiden edition of Thursday Special, an entertainment program that keeps you in the know with a spotlight feature that will inform, inspire, and entertain. Our guest for today is Oche Akor, a day trader, community manager, Web3 UI UX designer, and a coach in the cryptocurrency space.
Good afternoon, Mr. Oche Akor. It's good to have you here at the News Chronicle TV. Mr. Oche, I will just be asking a few questions based on cryptocurrency. Like we've been seeing the news of um, Bitcoin's like hike ever since Trump won the elections. And so, for someone who doesn't have any idea what cryptocurrency is, what is it exactly, and how does it work?
Yeah, so I said to understand what cryptocurrency is, we have to understand why cryptocurrency and why it's very important to what it is. So we had the Great Depression and the crash of the market in 2008, the financial markets. And prior to that, we had the dot-com boom in the early 2000s, spanning from the 1990s when the World Wide Web became a thing. So people started interacting. And as we know, where there is interaction between people, there is commerce, there is exchange of value. And exchange of value have to be represented in some form. That is basic economics. We had the trade by barter system, we had the gold standard, we have the payment ledgers, we have the currency, which the world currently run, and different forms of economic model. But what we realized is that most of the economic and financial models in the world are centralized. What I mean by centralized is that they are tied to a central governing body. Someone is in control of it. It is the government that sets the market prices. It's the government that decides how you exchange your goods and services. Your money actually belongs to the government. They just give you as a means of exchange of value. Now, there's nothing wrong with that system. It's the system we have used for a lot of time. It works, but with time there have been changes. So, for instance, let's say we are trading on the internet now. We are trading services on the internet. I'm supposed to be able to set my own prices the way I want to set the prices for me, and maybe having market makers who maybe are big industry players manipulate how the prices of the value I exchange trade other people in my industry. So we started having things like DigiCash in the back then, in the early days of the internet. They had no value. They were just forms of exchange. So maybe if you do something for me on the internet, I will just give you some DigiCash. Just like, let's say you do something for me on the internet and I just decide to reward you with MTN recharge card. Although recharge card have value, they don't really have values. You can keep them as maybe form of payment. If someone else does something for you, you can reward them with DigiCash, like that. And because of the demand for DigiCash as a form of exchange, it started having some value to it. So people were willing to give real money in exchange to hold it. So with that, we had Satoshi Nakamoto, which is a pseudonym for a group of computer gurus who created they wrote a paper, an academic paper, for the creation of Bitcoin. So it's not just Bitcoin is the first cryptocurrency that was created, but Bitcoin was not the main thing that the paper addressed. The paper addressed blockchain technology. How people can pass information through a secured cryptographic system and without interference from everyone, is not traceable, it cannot be reversed. It's a whole lot of definition. And for people who the system they used was a system called proof of work. For someone to pass information through a blockchain, some people were going to help them do verification, and people who verified for them were rewarded in something called Bitcoin. So that was the first cryptocurrency. So when you hear people are mining Bitcoin, they are doing work on the Bitcoin blockchain and being rewarded with Bitcoin. So just like DigiCash, because of the word system of the proof of work, the value of Bitcoin started having value. But the only thing that happened was that Satoshi Nakamoto, and they created a limited quantity of Bitcoin. As we know, scarcity pushes the prices up and increases demand. So they minted, I think, only about 20 million Bitcoin in the whole world. They kept some from themselves. So it's a whole lot of technology and a whole lot of things still just spiral out of the air. We had altcoins and other coins coming up like Ethereum using different systems. So cryptocurrency is basically an exchange, a form of a currency that is a reward is a means of exchange between people. But a whole lot of market have been around it. A whole lot of finance have been built around it. So it's basically just a currency that you get in exchange for value.
So why do you think it's essential or important for Nigerians? Do you feel like
yeah, Bitcoin is not really essential.
So?
It's not really essential for Nigerians.
Bitcoin.
It's essential for everybody.
Not
okay,
Bitcoin,
crypto generally. Sorry,
yeah, generally.
Cryptocurrency generally is not specific to a country or a region. It is what we call decentralized. Anyone can own it, anyone can trade it, anyone can sell it, anyone can buy it to anybody anywhere in the world. You don't have to pass it through the central bank. You don't have to pass it through MoneyGram. You don't have to pass it through Western Union. You just have to have an address, a public key, and some cryptocurrency, and someone you can send it over to another person's address in the twinkle of an eye. Another person can send it to you. And now there are so many with that system. It has bridged the gap of what we call centralized markets like banks, and that you can pay me in cryptocurrency real time in US dollars, in any kind of currency, because of what we have, what we call fiat currencies, where they merge a cryptocurrency to a normal currency. For instance, like USDT is an equivalent of the US dollar in the crypto market. So it's not really essential to Nigerians, it's essential to everybody in the world because of the problem it solves. And that is why it's very important that is why it's growing, because of the problem it addresses. It takes away the need for a middleman in your transaction, and it's a means that empowers people to become financially independent of their government or of their system of controlling forces.
Regardless of all these, pros, what are the cons? Because a lot of times, we only talk about the benefits, the advantage, why people should be involved in it. But then what are the risks involved?
Okay, there are two things. We have blockchain as a technology. Then we have cryptocurrency as an asset. Blockchain as a technology can be used to do a lot of things that don't involve cryptocurrency. You can apply blockchain in the security system, in the health system, in the educational system, without having anything to do with cryptocurrency. Blockchain in itself is a good form of technology that should be adopted by governments without regulation or any other thing. However, cryptocurrency is highly volatile. That's one of the risks. So we have a whole market created around different cryptocurrencies, which is now called the crypto market, where people buy and trade, bid and ask for cryptocurrencies. They trade it daily. They do swing trading. They do sports trading. A whole lot of financial markets have been created around it, the way we have forex market and the stock market. Now, the crypto market is highly volatile. If you're looking at it as a form of investment, it is not stable like treasury bills. It's not stable like your forex market, because nobody is controlling how your money moves. So you can put all your money and lost all of it within a twinkle of an eye. And likewise, you can put all your money and it will double in a twinkle of an eye. That is a highly volatile market. The advice we give as traders is that you invest what you are ready to lose. That's one of the disadvantages. Another disadvantage is there you can, cryptocurrency can be used because of how it is built as a secured system. Money that are criminal in nature or from criminal sources, people can use cryptocurrencies to launder this money, to send this money to people who want to use them to do harm. But some people see that as a disadvantage, but I see it as, well, that is just life. It's not cryptocurrency that causes crime in the world. It's just that it's a platform that can be used just like every other platform. After all, without cryptocurrency, people still launder money through banks. People even create banks to launder money. So that's one of the disadvantages. Another disadvantage is maybe there's no regulation. So market prices can be different across different places. So it's not so stable. Then we have the fact that people use it to run a lot of scam. You know, airdrop now is very popular. Everybody know about airdrops, but airdrops are not even the most fundamental of use case for cryptocurrency. So, and a lot of rug pull scams have occurred where people go and buy one token and the person just pull all their money from there and disappear with it, and the coin just dumps to nothing. So those are some of the disadvantages, but they are really not disadvantages to me. They are just risks involved, just like every other thing. Yeah.
Okay, so as a coach, in the cryptocurrency space, regardless of these disadvantages, what's one misconception you would like to address? What's the biggest misconception of it?
Yeah, that would be that people think that crypto is a get rich quick scheme. If you come to the cryptocurrency space with the mind that you want to come and blow, the crypto market will blow you. So it's not a get rich quick scheme, and it's not something you don't enter today and pull out money tomorrow. You have to learn how it works like every other industry, understand it to the core, which might even take years. It's an experience. You have to, like a trader, you don't say forex, it don't work well for you. You come to crypto, you go and collect people's money and you put it in one coin. The market will humble you. So it's not a get rich quick scheme. It has a lot of potential in the form that it gives higher return on investment, but it's also an investment with every risk involved in traditional investments or even higher risk. And you need to know what you are doing before you get there. Yes. So that's just one. And the second misconception I would like to address is that people think people who trade crypto don't make money. They make money from selling courses. So that is not true. If you know what you are doing is practical, you will make money from trading. Or you just need to join a community that's a lively crypto community. Trade as a group with experienced traders. You can use social trading platforms like the ones we provide on Portfolio. Things like that. Not to do any ad, but trade as a community, learn from experienced traders, do what you are supposed to do, build your portfolio over time, and you see that the market is going to favor you on the long run.
Okay, so finally, Mr. Akor, what advice would you give to someone who is considering going into crypto?
Seek information. Seek information. Don't jump into the market because of what the news is telling you or the trend. Look for an expert, join an active community, seek information. Follow people who have been in the game. If possible, get a good mentor. You pay to learn. It's not free. Pay people to teach you. Get a course. Know what you are doing before you start putting your money there. Don't just put your money. It's not a Ponzi scheme. It's not a get rich quick scheme. Whether you agree or you don't agree, in 4 years' time, crypto will still pump. Whether you get into the market now, you don't get into the market now, it will still pump. You can call it a scam. In 4 years' time, it will still be here. You will see it still going up. Bitcoin recently touched its all-time high at 95 to 100K. It's like a dream to so many people. It's going to go higher than that. You can keep following the news, or you can get information and join an active community, trade with. Yeah. Oh, what's your question? You said what?
Yeah, I was going to come. You said
Sorry, I didn't.
Bitcoin is going to go higher than it already is. So I was like, do you
No,
really
yes.
think so?
It's not. It's not what.
Most
It's
times
not a matter
things
of
like
what I
go
think.
high.
No, there's something. There's something we call the Bitcoin cycle, and it's a trend that occurs every 4 years. In every 4 years, because of something we call Bitcoin halving, the amount of Bitcoin in the market gets slashed by half the current price, thereby skyrocketing the price, the current market price of Bitcoin. So it has a 4-year cycle, which also coincides with the election cycle. That's why you see that during election time, Bitcoin always rises. It's not the election that rises it alone. It's because of something called the Bitcoin cycle. So in next 4 years, there will be another Bitcoin cycle. And when it happens, the price of Bitcoin will be higher than what it is. It can dump during the 4-year period, but I'm telling you, it's going to be higher than what it is because of the Bitcoin cycle. Because if you don't know what they are doing, people use it to cash out. So that's really.
Thank you so much. Thank you so much, Oche. I learned a lot. Probably I'll consider investing in Bitcoin. I'll get back to you.
You're welcome. We're always here.
Thank you. Thanks for your time. It's great having you. Thank you.
Thank you. It's a pleasure being here.
I hope you enjoyed today's show. For more content like this, be sure to check our website at thenews-chronicle.com. Make sure to subscribe to our channel, like and share with your friends. And don't forget to leave a comment of what you think about today's show or about cryptocurrency. I'll see you next week. Bye-bye.